From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome now to Balance of Power. This is where the world of politics meets the world of business. On the brief today, Sean Donnan in Washington on the planned signing of a Phase 1 trade deal between the United States and China. Bill Ferries also is in Washington on the unrest in the Middle East after Iran admitted it mistakenly shot down that Ukrainian jet. And Lucy Meakin over in London on the British economy's sudden contraction that was ahead of the general election last year. Okay, let's start, Sean, with you. Finally, I guess we're getting to the day here on Wednesday. We're finally going to sign this thing?
Yeah, absolutely. Wednesday morning, we'll get about 200 people plus at the White House for what is likely to be a bit of a victory lap for the Trump administration. They finally are going to roll out this Phase 1 deal. We're also going to see for the first time the text of that agreement, and that will be where the devil is. The devil always being in the details of this thing. Two big questions going forward here. One, how much substance is there in this thing? And secondly, will the Chinese live up to this deal?
And as I understand, Liu He, who's the vice premier, came over, but he didn't come alone. He also brought somebody from the central bank because of the currency part of this. And now we've reported this morning that actually the United States is going to say, oh, no, you weren't a currency manipulator after all.
Yeah, if you remember back to August last year, President Trump, during a real moment of heightened tensions between the world's two largest economies, declared China a currency manipulator. China reacted angrily to that. Now it looks like the U.S. is set to lift that designation, part of a kind of warming trend in relations, if you will.
Okay, we get the deal signed. Let's assume that happens on Wednesday. When are we going to know whether the Chinese are actually complying with it? Because there's a lot of questions on both sides of the aisle about whether the Chinese really follow through on their trade deals.
Yeah, no, absolutely. Look, it's the main commitments in this are on intellectual property, and there are some signs that the Chinese have already done a lot of what's in this deal. They have a new intellectual property law in place. They have some new intellectual property courts that are set up. The big question is whether they enforce that law and whether they really crack down on some cases. One of the things we're going to be looking for is some high-profile cases and whether they actually come around to that. The second thing is the big purchase commitment from the Chinese, $200 billion in purchases over 2 years. That is spread over 2 years, and we probably are not going to know whether we're really on track to match that until after the November election and well into 2021.
Okay, Sean, thank you so much. That's Sean Donnan reporting on trade from Washington. And now, also in Washington, Bill Ferries. Bill, there's a lot going on in Iran. Boy, that's really taken a turn, hasn't it?
Certainly was a very dramatic weekend of protests in the streets of Iran after the government admitted that its own forces shot down that commercial airliner that took off from Tehran and was headed to Ukraine. Any kind of national unity that we saw in the wake of the U.S. killing of that Iranian general, Qasem Soleimani, was pretty much evaporated this weekend when the government came out and said it was responsible for this shoot down, and people started asking questions about the initial comments from the government seeming to blame Western propaganda or perhaps even the U.S. for downing the plane.
Yeah, there's some pretty dramatic video coming out of Iran about these demonstrations. At the same time, we've had demonstrations on the street in Iran before. The thing that I don't remember before, but you correct me if I'm wrong, I don't remember people specifically denouncing the Ayatollah Khamenei.
Right. That was among the most dramatic things we saw, not just the numbers in the streets, but people chanting death to the dictator. And there were even protests in some streets where there was an American flag or an Israeli flag painted on the ground. It looked like people were deliberately walking around them instead of walking on top of it. Those are the kind of images we just haven't seen typically in past protests in Iran.
Okay, thank you so much to Bill Ferries reporting from Washington. Now let's go to London and Lucy Meakin, because we've got some numbers about the UK economy that surprised some people to the downside, Lucy.
Yeah, we saw some worse than expected GDP data today. Bear in mind it's quite lagging. This is our data from November, but it does make it look like the fourth quarter might have been flat. It's going to be hard for it to show any strong growth for sure after this data we saw today. But it's a real question now because people are suddenly talking about the chances of a Bank of England rate cut. Some people are even looking as soon as this month because we're starting to hear BOE policymakers bringing it up more.
Well, the thing that struck me about that, there is talk now about the Bank of England now cutting rates, as you say, as early as this month. Do we know exactly what the fiscal package coming out of Boris Johnson's government is? Because can the Bank of England really go forward if they don't know exactly what's happening on the fiscal side?
No, it's difficult, and you raise a very good point. It's very difficult for the Bank of England right now because we've got a lot of events as well as the economic events. So we've got this January 30th meeting where people are thinking about a rate cut. But actually, that's Mark Carney's final meeting. So there are questions about whether he would want to, make that kind of move and then leave. So some people are saying, well, not January, but then when our next meeting then takes us to March, which would be Andrew Bailey, his replacement's first meeting and there's no monetary policy report that day. And then we've got the budget in March as well. So we're going to find out all these things around these meetings, but we don't know when they'd actually be able to act on them.
Yeah, it's a tough act to follow, actually, I think, with Mr. Carney, given what's going on over there. Thank you so much to Lucy Meakin reporting now from London. Now it's that time where we get a check on the markets and how they're reacting to today's top stories. Joining us now is Abigail Doolittle. So it looks like the rally is sort of keeping going.
That's what is happening exactly, and not really much of a reaction to these stories we're talking about. But as we were talking before we went on air, it's all about earnings. So, of course, big banks kicking that off tomorrow. So there is a bit of a risk-on tone today. We don't quite have an all-time high for the S&P 500 right now, but just less than a point away. The NASDAQ, we do have an all-time high. Haven bonds trading lower. That tells you yields are going higher. Despite that, the banks are the worst or one of the worst performing sectors today, up just slightly. So investors really waiting to see what they do. Well,
you always say it's all about earnings. We're going to get some earnings out of the banks this week.
Yes.
And we had not a good week for any earnings last year was all sort of an earnings recession. So are we going to look at banks to figure out whether that's turned around?
Well, a lot of pressure probably on JP Morgan and CEO Jamie Dimon in terms of the tone for the earnings season for the fourth quarter. They are expected to post numbers that are moving in the right direction, also strong trading. But from a macro standpoint, investors will probably be looking to see what Jamie Dimon says about the global economy and the global situation for that macro. And can we come out of that earnings recession that was present in 2019?
And then tech right after that?
Tech will be the week after some of those big names coming. The first big tech internet name is Netflix. It'll be interesting to see what they do. They had a rough 2019, last all-time high back in May. So they have some work to do for investors to start rewarding those shares again.
A big couple of weeks in earnings. So thank you very much, Abigail Doolittle. And now we turn to Mark Crumpton. He's here with Bloomberg First Word News.
David, House Speaker Nancy Pelosi is accusing Senate Majority Leader Mitch McConnell of trying to cover up President Trump's impeachment. Leader McConnell backs a resolution that would dismiss it. That's if the Speaker doesn't send over the impeachment articles within a specified time. Pelosi is expected to do that sometime this week. U.S. troops cleared rubble and debris from a military base housing American soldiers in western Iraq today. The cleanup efforts come days after the base was struck by a barrage of Iranian ballistic missiles. It was Iran's most direct assault on America since the 1979 seizing of the U.S. Embassy in Tehran. The U.S. says no American soldiers were killed or wounded in the attack. Libya's feuding leaders are holding talks in Moscow today to sign a more lasting truce agreement. Russia and Turkey, which back rival sides, have pushed the two leaders to accept a ceasefire that took hold shakily over the weekend. Years of upheaval have left thousands dead in Libya and allowed Islamist extremists to dig in. Libya has been enduring its worst violence since 2011 NATO-backed ouster of Muammar Gaddafi. WikiLeaks founder Julian Assange was in a UK court today. He's fighting extradition to the United States to face charges of espionage, including that he conspired to hack into a Pentagon computer. He's denied wrongdoing, claiming he was acting as a journalist entitled to First Amendment protection. Assange has already served a 50-week prison sentence in Britain for jumping bail. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Coming up, countdown to the caucuses. With only 3 weeks to go until Iowa, Senator Bernie Sanders takes the lead for the first time in a crucial state poll as Senator Cory Booker drops out. We discuss with our political panel. That's next. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's down to the wire in the Hawkeye state with only 3 weeks until the Iowa caucuses. And the once crowded field is narrowing yet again, with Senator Cory Booker just announcing he is dropping out of the race. Here with more on where things stand in the Democratic presidential race is Bloomberg politics editor Wendy Benjaminson, who I'm delighted to say is in New York today instead of in Washington. So, Cory Booker, I mean, it's big news, but it's not necessarily surprising news.
Exactly right. I mean, Cory Booker was running a fine campaign. It's just that he couldn't really ever seem to find his lane. You know, the moderate wing was taken up by Joe Biden and by the sort of newcomer, well, very much newcomer, Pete Buttigieg. And Cory Booker was sort of just out there without really a foothold in the race.
And in case there was any doubt about those lanes, we've got a new Des Moines Register poll out now about Iowa with 3 weeks to go. And the Des Moines Register is usually pretty reliable, actually, indicating that both Buttigieg and Biden are doing pretty well. But Sanders now has got a little bit of a lead.
That was a little surprising because it always seems that Sanders' campaign has its group of supporters and they're with him passionately, but it's a static number. And this shows it may not be, and he's got some momentum.
So Wendy's going to stick with us, and now we want to bring in our panel, Christine Greer, Associate Professor of Political Science at Fordham University, and E. O'Brien Murney, founder of Red Barn Strategies. So Christina, let's start with you. What should we make out of Iowa right now?
Well, I mean, you know, Cory Booker dropping out, there'll be a small percentage of voters that will now have to decide where to go. I do think that, to explain Wendy's point with Sanders eking out this new lead, I mean, there are more and more Warren supporters who are getting concerned about this amorphous electability issue. And so I think that Sanders is able to sort of pick off just a few Warren supporters each week because they're getting more and more concerned that she may not be able to take it across the finish line. And we know that if Sanders does well in Iowa, then that bodes incredibly well for him in New Hampshire, which is essentially his backyard. So, now, once they get to South Carolina, I don't know. Hold on. Once they get to South Carolina, I don't know how that looks for Sanders because he definitely does not have a stronghold within the African-American voters.
Looking pretty strong.
There's so much shift that can take place right now. Don't forget, Warren is also the neighboring senator from New Hampshire as well. So that's good. The two of them will sort of duke it out there. The reality we have right now, though, is that Warren has a great organization in Iowa. And that's going to have a major impact. You have a caucus here, not a primary. As we were saying in the green room before, it's a lot easier to vote on a poll than to vote in a caucus. You have to show up at night. It's cold. And then if you don't get 15%, if your candidate doesn't get 15%, you're a free agent to go somewhere else. So Booker only had about 2.6% on a real clear average.
Right.
Real clear politics. So with that number, he wasn't going to be there anyway in Iowa to be a player.
But Wendy, okay, explain this to me. If it's a question of electability, why is it that Elizabeth Warren has a problem with that Bernie Sanders doesn't have? He's more electable than Senator.
Well, that seems to be what Iowans are thinking right now.
Why
based
would
on
that
the poll,
be?
or at least the ones. I think it's again because you know where Bernie Sanders stands. He comes at it. He says, "This is who I am. Love it or leave it." Well, Elizabeth Warren has started out on the far progressive left, and then she's been sort of inching her way away from Medicare for all and other things where she had a confused message on Soleimani, the Soleimani killing, and it just seems like maybe people are wondering.
The reality is she has not had a steady message, and when she was in the firing line of the debate, she fell apart. She had a chance to rise. She didn't do it there. She has the great organization, as we said, but also Bernie Sanders is battle-tested. He did this against Hillary Clinton. Warren hasn't really had an election in years. So Bernie's been going through it, and she hasn't.
Well, I agree with that. I mean, and definitely her debate performance has weakened. But I think we also have to be very clear about, a small but growing percentage of the American electorate still is very honest about the fact that they do not feel comfortable with the female in leadership.
Do you think that's what it is?
I do think that is for a percentage of the electorate. We saw that with Hillary Clinton, but there were excuses of, her background,
But
we're not too sure. But with Warren, now we still get this amorphous, like, there's something about her I don't like. I can't put my fingers on it. And I think for those of us who study gender politics, we can put our fingers on it.
But that's the Democratic primary voter we're talking about. But don't forget.
We have to get through a Democratic primary.
I let you talk. I let you talk. Please let me finish.
Okay.
But the other thing that's very important for her at this point is she is the number 2 pick for many. So as these other men fall off, she is their pick, which means a lot in the Iowa caucus. As they gather in those rooms, in those sites, they don't get 15%, they go over to her.
Well, Christina, you study this quite a bit, and so I really would like your views on it because I know this from a media point of view when you do focus groups on people on air. It turns out there is a disadvantage often for women, but it isn't just the men who have that prejudice.
Yes.
Often the women.
Yes, indeed.
And is that true in politics as well?
You don't need patriarchy. You don't need men to have patriarchy, right? And we saw this with the Bradley effect. You remember with Bradley running for governor, there were lots of people who said they were going to vote for him, and then all of a sudden he loses abysmally. We've seen this time and time again with female candidates, where when we've polled the electorate, they say that they're going to vote for them, or they say that this candidate is their second choice. When it comes down to actually voting in a private voting booth, then we see very different results sometimes.
But this is not
especially for executive office.
Wendy.
Yeah, and it seems like Elizabeth Warren is quite aware of that, because she has started this new sort of effort that we wrote about today that talks about how she has black women campaigning for her. She's done interviews in Cosmopolitan and Elle and Vogue, which have a largely female readership, of course. And then she's doing a lot of events with Katie Porter, a newly elected Iowa congresswoman. So she's aware that she wants to bring more women into her.
But the campaign problem is she's starting something new. She's starting something new because other things have failed. But what she still has, as she said, she's got the number 2 pick at this point going forward. But the reality is, look, this is the Democratic primary. The women aren't doing as well as they should be doing possibly, and there is now only one non-white candidate on the stage, and that's Yang at this point.
Should we read anything into that, Christina? Because it does strike me that on the Democratic field, we had some plausible candidates, people of color, and now we have Mr. Yang, and that's it.
Well, we also have to look at the requirements for people to get on the debate stage. And we know that there are gross inequities as far as salary and compensation when it comes to whites and non-whites. And we know that political tithing is a theory that I talk about. People who actually give to political candidates is actually much more established within the white community and not other communities. So there are lots of people who are interested in candidates but don't necessarily give money to particular candidates. And all of the data shows that it's much harder for female candidates, candidates of color, and especially female candidates of color to raise money.
But Harris was raising a ton of money.
For an election.
Harris was raising a ton of money. They mismanaged the campaign. They mismanaged the campaign.
There is mismanagement indeed. However, we know that for someone like Pete Buttigieg, who is the mayor of a town of 12 people, right? I'm being somewhat hyperbolic, but the fact that he is able to raise the type of money that he is, when you look at Biden and Bernie, and all these other candidates, we know that there's clearly something else going on.
Yes. Pete Buttigieg is a great candidate. Cory Booker is I Am Spartacus, a lousy candidate, lousy campaigner.
Well, but let's talk about the money just for a minute. What do we know about the money? Because we saw record amounts come in. But how is Biden, for example, doing? Because at one point there was concern about whether he had the money to do what he needed to do.
I got those numbers right here if you need them.
You do?
I do. Sanders raised 34.5, Buttigieg 24.7, Biden 22.7, Warren 21.2, Yang 16.5,
So,
Klobuchar 11.4.
But that sounds like it's enough money to stay in the race.
Yes, Biden's doing better. He's still not doing very well because he's hewing to this old method of going around to rich places in the country to raise money. And Pete Buttigieg is scooping up a lot of money from places like Silicon Valley and Hollywood and New York. But Biden is doing better. Plus, there's a super PAC sort of waiting to help him out that I think will also boost him.
And he's been getting by on name recognition. I mean, he was the vice president for 8 years, and he has a lot of goodwill with particular communities that's sort of giving him some free press.
But what you can't overlook.
Really quickly, are we going all the way to the convention without a nominee? What do you think?
I could see it. I can see it.
You think we'll go all the way to convention?
49 days from now, we'll know much better with Super Tuesday and what happens to Mayor Bloomberg at this point and who's left standing after you've already gotten Iowa, New Hampshire, Nevada, South Carolina, and if everyone's getting their ticket punched and they're all there, no one's going to get enough.
The polling indicates you've got at least 4 candidates who are pretty strong and with a lot of money. That would suggest this is not going to be over right away.
That's probably true. I think Super Tuesday will winnow some of it out, and more people will feel like they're throwing, those people who have a limit to their money will feel like they're throwing good money after bad after a while. I have a feeling they'll start coalescing by mid-March.
Every 4 years, we say it's going to the convention, whether it's be Republicans or Democrats or both. Some year, someone's going to get it right.
That's because it's more fun for us if it does.
And the wild card, though, is Michael Bloomberg, who does have billions to spend. And so even though he's not going to be in the debate stage and he's not participating in early primaries, that does not mean that his message is not resonating with people who are on the Super Tuesday states. So he's another factor that we haven't
He
sort
is
of
staying
seen.
relevant without being in the first 4 primaries and caucuses. That has been the key historically to why you have to get in early and stay with it. He's not spending money or time there, and he's standing there on Super Tuesdays. This weekend, he was in Texas doing it, where nobody else was. He's in Texas, he's on TV, and nobody else is.
Okay, many thanks to our panel now, Christina Greer and E. O'Brien Murray. Also, we had with us Wendy Benjaminson. She's our political editor here at Bloomberg. And that disclosure, Michael R. Bloomberg is the founder and majority owner of Bloomberg LP, the parent company of Bloomberg News. And a programming note now, one of the most recognizable brands in business news is back. I am now anchoring Bloomberg Wall Street Week, recapping the week with compelling conversations led by heavyweights in the worlds of business and finance. New episodes debut every Friday, and if you missed last week's premiere show, it is now available on YouTube, the Bloomberg Terminal, and at Bloomberg.com. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It is time now for the stock of the hour. Tesla has hit a new record high. The shares are surging more than 8% today and have passed $500 for the first time, in part because of China electric vehicle subsidies. Kayla Lyons is here to explain it all to us. So Tesla.
Now I'm just looking at the numbers, and we're well past $500. Yeah. We're up at around $515. So the rally just continues to go on. This is a stock that, since its lows in June, is up 182%. And actually, the big bulk of that rally has only come since October. It's doubled since October 23rd, when they reported that surprise third quarter profit. Now, of course, today what's aiding in part is the fact that China is signaling that they may not continue to cut back electric vehicle subsidies in the country at the same pace that they have been. The Minister of Transportation and Industry saying that it's not going to see more cuts on July 1st, which is what we saw back in 2019, and we saw that it has had a very large impact on China's EV market. The electric vehicle sales in the country have fallen 6 consecutive months as of December, which obviously isn't a great story for a player like Tesla, which already gets about 10% of its revenue in China, but just opened that shiny new factory in Shanghai and is starting to deliver those locally made cars. So Tesla would stand to benefit should these subsidies not be cut any further. Of course, they're supposed to be phased out entirely by 2021, but you may be seeing some optimism in the market that that timeline may be pushed back.
In the meantime, analysts are more bullish on it, are they?
Analysts are more bullish. There's been a chorus of them recently that have gotten more bullish on the stock as it has run up. But today, Oppenheimer, an analyst over there, Colin Rush, upped his price target from $385 to $612.
Wow.
So that implies a 28% jump from where we are right now. And I should say that right now, this is a stock that is trading well above the average analyst price target. That is only around $334. And as I said, we're now up around more than $500. So that is actually the widest the spread has been between where the stock is actually trading and what the target is since it IPO'd. So you're seeing some analysts, like over at Oppenheimer, seeing that there is more room for this stock to run. He thinks they have a competitive advantage because other companies are innovative as quickly and they finally have scale that allows for profitability. But then some are saying maybe it's time to take a profit.
Yeah, maybe so. But the other thing is, it strikes me how much this has become a China stock. How important China has become to Tesla.
It's very, very
really
sensitive to that story.
Okay, many thanks now to Kayla Lyons for the report on Tesla. Up next, the United States will be lifting its China currency manipulator tag ahead of the expected Phase 1 trade deal that's coming this Wednesday. We'll address that next with Ewan Relly. He is BDA Partners co-founder and senior managing director. Live from New York, this is Balance of Power. We're on Bloomberg Television and on radio. From New York, this is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, as we've been reporting, Democrat Cory Booker is dropping out of the presidential race. On Twitter, the New Jersey senator thanked his supporters and said he's sharing the news, quote, with a full heart. As the first African-American senator from New Jersey and a first-term senator, he drew comparisons to former President Barack Obama, though his campaign never caught fire. Senator Booker faced struggles in the polls and in fundraising. Democratic presidential candidate Elizabeth Warren is turning back to a bloc of voters she once appeared to have locked up, women. She's putting high-profile female surrogates and activists on the front lines of her campaign in Iowa and giving interviews to fashion magazines. Senator Warren has seen her national lead dwindle ahead of the Iowa caucuses. At the height of her campaign, she had the support of a third of women, but that advantage has all but disappeared. A Pakistani court has overturned the death sentence given to the country's former president. The court ruled that the special tribunal formed to try Pervez Musharraf was not legal. The former Army general was found guilty of imposing emergency laws in violation of the Constitution during his rule. Musharraf seized power in 1999 when he ousted the elected government in a military coup. He resigned in 2008. Queen Elizabeth II has agreed to a period of transition for Prince Harry and his wife Meghan Markle. The Queen says she would have preferred that they'd remain full-time royals, but that she respects and understands their wish to live a more independent life. The couple will spend time in both the UK and Canada. The Queen says today's decision followed discussions that she called very constructive. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks very much, Mark. Taiwan voters have re-elected their pro-independence president in a landslide victory. Bloomberg's Stephen Engel took a look at what the outcome might mean for China earlier in Taipei.
Now that Taiwan President Tsai Ing-wen has overwhelmingly won re-election here in Taiwan, it begs three main questions. One, how will China handle another 4 years of its arch nemesis, its thorn in the side? That is Tsai Ing-wen and her pro-independence minded policies. Now, clearly, the electorate here in Taiwan had support for the protest, the pro-democracy protests in Hong Kong, and they overwhelmingly rebuffed Beijing's overtures for closer ties with the mainland. And number two question is, how will the KMT go forward? That's the opposition party, the first Chinese ruling party of Taiwan some 71 years ago. They've now lost 4 of the past 6 presidential elections, and some say they need a new voice, a new message to appeal to the young voters here in Taiwan. And finally, number 3, the economy. The economy has been doing really well here in Taiwan. It helped propel as well Tsai Ing-wen to re-election. However, much of that growth is tied to the global economy as well as the U.S. China trade war. A lot of Taiwanese manufacturers onshored manufacturing from higher cost and higher tariff China back to Taiwan. And can the chip cycle continue and 5G spending continue? A lot of that will go into determining whether support for Tsai Ing-wen and her DPP party will continue beyond just this initial bump from the polls. Stephen Engel, Bloomberg News, Taipei.
Sticking with China now, the country's vice premier is set to arrive in Washington today with a delegation. They're expected to sign phase 1 of the trade deal with the United States on Wednesday. Meanwhile, we're learning that the United States officials are set to lift the China currency manipulation status ahead of that meeting. For more, we welcome now Ewan Relly. He's BDA Partners co-founder and senior managing director. Ewan, welcome. Good to have you here.
Thanks for having me, David.
Okay, so we've been hearing about this, it seems like forever, phase 1. What difference will it make?
It's de-escalation, it's détente. It's certainly not peace. We're a long way away from peace, but I think in any dispute, people welcome when the parties start to get back together again.
What will President Donald Trump have accomplished? I'm sure he will say he accomplished a lot. What will he really have accomplished with this phase 1?
He's already called it a great, tremendous, historic deal, as is his wont. Frankly speaking, he won't have accomplished very much, in our opinion. We believe that, frankly, we haven't really made any significant progress in reforming Chinese behavior, and certainly that it's come at some considerable cost to U.S. companies and to U.S. consumers.
I suppose whether he's accomplished that much depends on what he was trying to accomplish, because we've heard 2 different things. One is the trade balance, and the other is really reforming behavior, as you say, with intellectual property, national security issues, things like that, high tech. With respect to the balance of trade, will he have really helped the farmers in the end?
I'm going to tell you he hasn't achieved much on either of those questions. Certainly on the balance of trade, the numbers look very similar to where we were before, other than that U.S. farm exports to China have dropped precipitously from $27 billion 18 months ago before this trade war to about $7 billion in the most recent 12 months. We're told that they'll get back up to, to record levels, to 40 or even $50 billion a year. I'm frankly highly skeptical.
Are you? Because there was talk about whether it is actually possible for China to get there. Do you believe that?
I don't think it's possible. I think other than, unless China wants to buy everything it needs globally from the U.S., which is hard to imagine in practical terms.
And as a practical matter, what does phase 2 look like? Does it start right away? Does it go anywhere?
Well, we have a president who's very unpredictable. He is tamping down expectations. He's saying he doesn't actually expect phase 2 necessarily to come before the election in November. There's some talk that we may have multiple future phases. So the future is pretty uncertain as of today.
At the same time, in the meantime, there is something of a drag on the U.S. economy. And let's be frank, they're rolling back half of the tariffs that were imposed in September, not imposing the ones in December, but there's a lot of other tariffs still sitting out there.
We've still got over 21% average tariffs on $300+ billion of product that's moving. And again, that's a significant market distortion. Business doesn't like it. Actually, I would say that President Trump has had some latitude to proceed as he wants because the rest of the economy has been performing pretty strongly. But if you remember, GDP got up to 3%. It's back down around 2.5% today in the U.S. The trade war's probably costing us 0.5 to 0.75% of GDP growth a year. So again, there's considerable cost, and it's not clear exactly what the long-term benefit will be, even if Trump can declare victory eventually.
Take a look at the alternative route, because there is wide support in the United States on both sides of the aisle for doing something about China in the terms of trade, and with many of our Western allies saying something's got to be done with China, that they really are getting away with some things they should not be allowed to. Could they make any progress? Could President Trump make any progress without doing something like tariffs?
I think tariffs have had some effect in terms of focusing opinion in China. I mean, the simple truth is we've got two strong men in Xi and Trump who are both playing to their domestic audiences to a considerable degree, and optics are pretty significant here. I think what we're seeing at the moment is the Chinese making conciliatory noises, but they're pretty set in their ways. 3% of their entire GDP goes into state subsidies, and it's going to be very difficult to make those subsidies go away.
As you talk about these two very strong people, President Xi and President Trump, are they essentially tacitly, maybe not overtly, but tacitly agreeing to disentangle their two economies to some extent? Are they preparing for that eventuality?
I'm afraid that is happening to a considerable degree. We see when supply chains move away from China, they won't go back to China very quickly. Same the other way around. You know, China's finding ways to do business with other parts of the world, and that, again, it'll take some time for the U.S. producers to win back favor from Chinese customers. So I think, it's sad to say that, but by definition, this is we are seeing a decoupling of the Chinese and U.S. economies, which will last for a very long time.
It may be sad, but were there hydraulic pressures that almost inevitably put it in this direction? And by that, I mean this. You look at Huawei.
Yes.
You look at TikTok. You look at these various situations. It is a differently structured economy where a major corporation in China, you have to assume at some point Beijing might call them up and tell them what to do.
Of course.
Which is very different from our system. And as a result, as we became more integrated, was it inevitable almost that we were going to have these conflicts?
A couple of points. Number one, it's not just the Republicans. Both U.S. parties see China as the bogeyman today. You're absolutely right about that. So I think, in a way, Trump sometimes behaves in a way that seems obvious in retrospect. So, to some extent, he is clearly feeling the pulse of opinion, a broader opinion in the U.S. Having said that, I think U.S. consumers have benefited from being able to buy product cheaply from China, and that's not only consumers in terms of toys and TVs in Walmart, but it's actually also U.S. producers who've been able to buy raw materials, intermediate goods very cheaply historically. And I see this as a fairly free marketeer type of economist. I see this as being really damaging because it's a market distortion.
But are there workarounds for those relatively inexpensive consumer goods as a practical matter? China had already said they wanted to sort of retrace where they were in sort of manufacturing cheap goods.
Yes.
And you have Southeast Asia, you have various places in Asia and things like that who are eager to step into that. Is it possible we can do a workaround that really won't hurt the U.S. consumer?
There's always gamesmanship. We know that some of the increased purchases by China from the U.S. will be moving product that would have been bought via Hong Kong previously, taking it straight onto the mainland. So yes, of course, there are workarounds, and we're going to see Chinese manufacturers start to offshore their manufacturing to other parts of Asia.
Fascinating. Okay, thank you so much, Ewan. Great to have you with us. That is Ewan Relly. He is BDA Partners co-founder and senior managing director. Coming up here, a program one of the most recognizable brands in business news is back. Bloomberg Wall Street Week recaps the week with compelling conversations led by heavyweights in the worlds of business and finance. New episodes debut every Friday, and if you missed last week's premiere program, it is now available on YouTube, the Bloomberg Terminal, and at Bloomberg.com. We'll play a portion of that program. That's coming up next here on Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. One of the most recognizable brands in business news is back. Bloomberg Wall Street Week recaps the week with compelling conversations led by heavyweights in the worlds of business and finance. For our debut episode, I was joined by our regular contributors, former Treasury Secretary Larry Summers and TIAA CEO Roger Ferguson. And we were joined by Kim Liu. She's Carnegie Corporation Chief Investment Officer.
One of the things that I heard that was particularly concerning, because I think it's true, is when Roger was talking about the fact that expectations for returns over the coming 10 years is probably going to be significantly less. And Larry made the same point. And so there is consensus around the fact that because interest rates are so low, the expectation is that returns may be more modest. And for a foundation, that's death by 1,000 cuts, because we are mandated to give away 5% a year. So unless we can feel pretty confident that we can receive a 5% return, then that is a slowly declining of our portfolio. And really, it really puts our grantees at risk, because we'd have less and less to provide for them over time. And so that is a much worse scenario, quite frankly, for us than if we had a big decline. Because if we had a big decline, we reset our payout, and then we'd slowly see it rise back up again. But right now, there's a general expectation that we're going to bleed assets slowly over time. And so pretty concerning for the foundation community.
So, Kim, what are your options? Do you take on more risk? Do you change your liquidity or duration? I mean, what can you do to address that issue?
So that goes back to some more stuff that you guys were talking about earlier, which speaks to the fact that we're looking for more active management. And we're looking for picking, be it sectors or opportunities that we think offer us the opportunity to outperform. Traditionally, foundations and endowments have put a lot of their assets in alternatives. And that has been possible because we are long-term investors. And so we don't have to worry about the short-term nature of the market. We spend much less time thinking about what's going on in the stock market and in the bond market in any one time. And in fact, we can make investments in things that we think are underpriced and just hold them until they realize full value without having to report on quarters, and maybe not even annually sometimes. And so what we mean by the fact that we're long-term is that we don't have to worry about what happens in the short term. We can invest in things that maybe don't actually produce substantial returns in the short term, because we believe that they're going to produce returns in the long run. The problem, because we have a lot less degrees of freedom, because we have so much wrapped up in alternatives, is that there's less ability to rebalance and to take advantage of things that happen in the short run. We just sort of have to set a asset allocation and stick with it.
Roger, how does that work for you? Because I think TIAA is big in alternatives, aren't you?
We're very big in alternatives. I think we're big in alternatives for maybe some of the reasons that Kim talked about, which is we're thinking about payouts over the next 10, 20, 30 years because we're a retirement-oriented company. And so I think both of us share in common this notion that you want an investment that is going to, some of it short-term, but some of it's going to be long-term, which leads to a question. I think the thing we have in common is this notion of not needing immediate liquidity. And you should talk about maybe how do you think about liquidity, your liquidity needs, how you project that, and how that then drives your investment thesis and activities.
So liquidity is amazingly important for us because we have no inflows of capital. And so because of that, we have to plan for it. Now, we are equity biased. 85% of the portfolio is invested in some form of equities or equity-like securities, with very little in fixed income securities. The issue being that we make sure that we have sufficient liquidity to pay our payout, 5% a year, plus the cost of running the office, plus the cost of rebalancing and meeting our other liabilities, which is a significant number of unfunded commitments as a result of having so much in alternatives. And what we think of that as ballast for the portfolio becomes under normal circumstances, when the market doesn't behave particularly well, and the Fed wants to stimulate, they lower interest rates, makes people go out and spend more money, and makes bond prices go up. We sell the bonds, we reinvest in equities. That's how we rebalance. Now we are concerned about the fact that people will not actually go out and spend because they feel like they have to save more because interest rates are so low, and rates are so low that it will not have as big an impact. And so our fixed income portfolio doesn't have as much ballast as it used to have. And so that's a big concern. And there are a number of things like that which we have traditionally relied on in order for us to portfolio construct for the long term, which are not as dependable as they used to be. And so we're concerned about what that means and how we should think about things differently.
I'd love to be wrong, but I think you guys are way optimistic for the next decade on alternatives. It used to be that there were only a limited number of alternatives trying to pick stocks, and there were all kinds of households making bad trades, and the alternative managers could make money therefore. Now there's much less so-called noise trading and many, many more alternative managers, and they're still all charging high fees. Yeah. Used to be you could give up liquidity and make private equity investments and expect to get paid for the fact that you'd given up liquidity. Now there's trillions of dollars in private equity investments, and there aren't that many more deals, so they're being bid up in price. Are you really confident that by turning to alternatives, you're going to generate substantial outperformance relative to stocks and bonds going forward in the way that's admittedly been true in the past? I wonder if the game isn't losing some of its edge.
I hope you're wrong, too. But I do agree with you. I do think the game has changed. And I do think that what we've traditionally done is invest in alternatives because we believe that we can create value out of the noise. And you're absolutely right that there's far less inefficiency than there used to be. There's so much capital flowing into the market. There's so many different types of people sort of leveraging all the different opportunities we saw. One of the advantages that Carnegie has, which unfortunately Roger doesn't have, is the fact that we are small. We're only $3.5 billion. We can play in spaces that are niche spaces that capital can't flow in. It's not worth it for some of the larger managers to go into a market that's only can support a $100 million fund or a $75 million fund. But we can play in that market. And so what we're doing is we're tending to go smaller. We're tending to go even more inefficient. It's a different risk profile. So we need to think about it differently.
That was Kim Liu of Carnegie, Roger Ferguson of TIAA, and Larry Summers on Wall Street Week. Catch Wall Street Week Fridays at 6 p.m. Eastern and airing everywhere online. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The British royal family spin-off is taking yet another turn today. Senior members of the family, including the Queen, Prince Charles, Prince William, and Prince Harry, met today to discuss the Duke and Duchess of Sussex's decision to step back from royal duties. A statement from Buckingham Palace confirmed this past hour. Bloomberg's Tom Metcalf joins us now from London with the story. So, Tom, welcome. We do have a letter from the Queen. I'm not sure the last time I saw a letter from the Queen, basically saying we had constructive discussions today. We respect the fact that they want to step back from this, even though we wish they wouldn't.
Yeah, exactly. It's been sort of some element of progress around this whole affair, which is basically still very much shrouded in confusion. What the Queen's statement is really doing is sort of kicking the can down the road for a few more days, but at least there's some clarity now. It seems likely that Prince Harry and the Duchess of Sussex will be spending certainly a lot more time in Canada, even in this transition period. But it's been pretty extraordinary times at the start of this year for what's probably among the most visible people in this royal family.
Yeah, this is a family matter at root, but it also has some finances involved, because besides the Queen saying that they're going to spend more time in Canada and the UK, she said Harry and Meghan have made clear that they do not want to be reliant on public funds in their new lives. So it sounds like the purse strings are going to get cut at some point, although I guess after a transition period.
Yeah, exactly, and it's still not entirely clear what that means, but one thing that's certain is there's something in terms of funding of the royal family called the sovereign grant, and that is basically dispersed by Buckingham Palace or the Queen. And effectively, already Prince Harry and Meghan made pretty clear that amount they're almost certainly going to do away with. What's perhaps still up for question is a lot of their official office is funded by their father, Harry's father, the Prince of Wales, which comes from this big landed estate handed down through the monarchy. And, that's a huge chunk of their expenditure, much more than this sovereign grant. And it's certainly, I don't think there's been any clarity, and I think, frankly, the royal family don't know either, like how that's going to work itself out. Will they still accept that? And if they do, can they then take on these sort of income generating jobs that they're hoping to do by cutting off the sovereign grant.
So, Tom, do we know whether Prince Harry owns property outright, or is it all owned by his father, Prince Charles, and he receives sort of, forgive the expression, an allowance?
It has a pretty good summary. I mean, Prince Harry is certainly independently wealthy from the estate of his mother, Princess Diana, and he's also thought to have received some money from the Queen Mother. That all comes together at about, say, 20 or 30 million pounds. But sort of the bulk of his ongoing expenditure is almost entirely funded, as you say, by this sort of quasi-allowance from Prince Charles. So, I think from Prince Harry's and Meghan's perspective, any of their official duties, that should rightly be funded from the kind of royal purse, as it were. But plenty of people in Britain and beyond have different views to that, and it seems that the royal family itself is quite split on that.
Yeah, and as they look forward to making money, the Queen might want to have some say about exactly what they can do and what they can't do. It could be rather embarrassing, depending on what they want to do. And many thanks now to Bloomberg's Tom Metcalf. He's reporting from London. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we're going to talk with Mary Lovely of Syracuse University and the Peterson Institute. We're going to talk to her about what's going on with China trade. This is Balance of Power on Bloomberg Television and on radio.